Hey everyone, in this video I'm going to compare two quite different energy companies. I'm going to answer which one is the better stock to buy right now. Is it ExxonMobil or Plug Power? Of course, ExxonMobil, the more traditional energy company, and Plug Power, fueling with hydrogen fuel and a up and coming uh, innovative growth stock that might have a great future ahead, but for now hasn't really delivered on those prospects. Looking at recent stock performance, ExxonMobil's down 7.6% off its highs this year, while Plug Power is down 51.96%. Looking at revenue, you can see how different these companies are. In the most recent quarter, ExxonMobil delivered revenue of 83.6 billion, while Plug Power delivered revenue of 220.74 million. Additionally, if you look at the operating profit margins, you can see another huge difference in these two stocks. Plug Power has consistently lost money on the bottom line, while ExxonMobil is a healthy, profitable company which generated operating profit margins in the trailing 12 months of 18.15%, while Plug Power lost 93.79% on the bottom line. In other words, it was negative 94% operating profit margin in the trailing 12 months, which is a lot of money to be losing. The story looks the same if you look at cash flow from operations to sales. Sometimes when you're looking at growth stocks, it helps to look at cash flow from operations to sales as well as operating profit margins when you're comparing a growth stock and a stock that's more mature like ExxonMobil, because that will eliminate some non-cash expenses that might be favoring the more mature stock and less favorable to the growth stock. But in this case, even when we remove the non-cash expense and look at cash flow from operations to sales, ExxonMobil is still way better than Plug Power, which is understandable given it's, a very innovative growth company. But still, what troubles me is we see here ExxonMobil 19.86% cash flow from operations to sales over the trailing 12 months, which is a very, very good margin when you consider the hundreds of billions in sales that ExxonMobil delivers. Um, but what troubles me with Plug Power is not just that it's negative 118% cash flow from operations to sales, but that I don't see any consistent improvement towards positive cash flow from operations to sales. Like we're looking back 10 years here, we see just flat and moving worse. Even like if we go back 3 years, I don't see a consistent upward improvement in terms of cash flow from operations to sales. That troubles me when I'm looking at when I'm looking at innovative growth stocks. I like to see improvement towards profitability. Even if you're negative, I want to see moving in the right direction. Finally, let's compare these two on valuations. And I chose to use the forward price to sales because Plug Power is negative cash flow and negative earnings, so I couldn't use price to free cash flow and price to earnings, which I prefer as valuation metrics to be more informative. So I was left with a few choices, including the enterprise valuation methods and just the price to sales method, and I chose the price to sales to simplify things. Looking at this metric, ExxonMobil trades at a forward price to sales of 1.243 compared to Plug Power trading at a price to sales of more than twice that at 2.498. Now, another interesting point is that Plug Power is way cheaper than it was, right? It was formerly trading at a forward price to sales of over 12. Now it's down to 2.498. So it's cheaper than it's been, right? It's cheap, way cheaper than it's been. And the opposite is true of Exxon Mobil. It was trading at a forward price to sales of 0.75. Now that's up to 1.243. So this is more expensive than it was. It's near its highest price it has been in the last year and a half. Given all of that, given everything we looked at, and given the future prospects, if I had to pick one of these two energy stocks to buy right now, I would pick ExxonMobil. I feel the safety in the cash flow and the profitability is so superior to Plug Power that it outweighs the growth potential of Plug Power, which of course Plug Power has way more growth potential than ExxonMobil. But I feel that riskiness is a little too much to overcome the safety in the profits and the cash flow of ExxonMobil. So all things considered, looking at risk versus reward, I would prefer ExxonMobil in this case here. All right, that's all I've got for this video. Thank you so much for watching. If you like this, please go ahead and subscribe. I've got a lot more videos just like this one. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.